Ever wondered how coffee can help you invest? Sounds a bit outlandish, right? Well, let's get ready to brew some mind-boggling concepts together. We're about to dive into the unique concept of the book Coffee Can Investing. This isn't your typical financial guide. It's a journey that takes you through the world of long-term investing using an unconventional metaphor: a coffee can. Imagine the pioneers of old, stashing their most precious possessions in coffee cans for safekeeping. Now, replace those treasures with stocks, valuable stocks. The author brilliantly uses this analogy to help us understand how to store and grow our wealth. It's about making choices that will stand the test of time, about choosing stocks that are worth keeping for the long haul, just like those pioneers who trusted their coffee cans with their treasures. So how exactly does this coffee can strategy work in investing? Let's delve deeper. Imagine a coffee can. Now, instead of coffee, fill it with stocks, but not just any stocks. The coffee can strategy, as laid out in the book Coffee Can Investing, advocates for a method of picking high-performing stocks and burying them in this metaphorical coffee can for an extended period. The premise is simple, yet profound. Once you've selected a stock and placed it in your coffee can, you essentially forget about it. No constant monitoring, no knee-jerk reactions to market fluctuations, and certainly no panic selling at the first sign of trouble. It's a strategy that demands patience, discipline, and a certain amount of faith in your initial investment choices. But how do you select which stocks to place in your coffee can? The strategy encourages investors to focus on companies with strong fundamentals and growth potential. This means looking beyond the hype and the headlines and really digging into the financials of a company, its performance history, and its future prospects. Think of companies that have demonstrated consistent growth over the years, have a strong market presence, and are leaders in their industry. These are the kinds of coffee can-worthy stocks that can weather market storms and come out stronger on the other side. The coffee can strategy is not about making quick bucks. It's about the long game. It's about understanding that the stock market is not a sprint, but a marathon. It's about acknowledging that the road to wealth is often slow and steady, and not without its bumps and detours. This strategy also teaches us the importance of resisting the temptation to react to every market movement. The stock market is a volatile beast, prone to dramatic highs and lows, but the coffee can investor knows that these fluctuations are part and parcel of the investing journey, and that true growth comes from weathering these storms, not running from them. So, the coffee can strategy is all about patience, discipline, and faith in your investment choices. But what are the benefits of this strategy? Storing stocks in a coffee can might sound unconventional, but it offers some fascinating benefits. Let's delve into this intriguing concept a bit more. The first big advantage of the coffee can strategy is the minimization of transaction costs. You see, every time you buy or sell a stock, you incur a transaction cost. Now, if you're constantly buying and selling, these costs can pile up quickly. But with the coffee can strategy, you buy and hold. It's as simple as that. No unnecessary transactions, no extra costs. Next, it's all about reducing the impact of human emotions on investing decisions. It's no secret that our emotions can lead us astray in the world of investing. Fear and greed, in particular, can cause us to make poor decisions. But when you're investing with the coffee can strategy, you're not constantly watching the market. You're not tempted to sell at the first sign of a downturn or buy more when prices soar. You're essentially taking emotions out of the equation. Finally, let's talk about the potential for significant returns over the long term. The coffee can strategy is all about patience and time. It's about allowing your investments to grow and compound over a long period. And history has shown us that over the long term, the stock market tends to go up. With these benefits, it's clear why the coffee can strategy can be a game changer in investing. But what's the key takeaway from the book? The heart of Coffee Can Investing lies in its simple yet profound message. It encourages us to approach investing with patience, discipline, and a long-term mindset. It's not about the daily fluctuations or quick wins, it's about making thoughtful decisions on valuable stocks, then allowing time and compounding to work their magic. It's about adopting a set-it-and-forget-it mindset, much like the coffee can strategy. So, Coffee Can Investing teaches us to treat our investments like a coffee can. Fill it with valuable stocks, bury it, and let time do the rest.